Good afternoon, everyone. This is Abid Khan, and you are watching Karachians Academy YouTube channels. So, in our last lecture, we were doing CIE AS level accounting paper 9706, paper 2, and version 2. So, we are doing May June attempt, the latest attempt, and in our last lecture, we have done question number 1. So, now today we will do question number 2. So, move on to question number 2. These questions we have done. There are few theoretical questions, so we will separately discuss. And this is our question number 2. So first of all, very carefully read question and its requirement. So if you miss out anything, ultimately that will not be a good for you. So what the question number 2 is? So we limited owns owns various non-current assets. Non-current assets depreciate due to a number of the factors including wear and tear. So what the question is, state 2 reasons other than wear and tear why non-current assets depreciates. So you already have studied this into your book, that there are a lot of factors like obsolescence, passage of time, and depletion, and all these things. So I would rather tell you to, whenever such kinds of questions are coming, so you should you can easy approach to your marking scheme. So we will see what the marking scheme says about this. So marking scheme says technological changes. Yes, you have to show only 2 reasons of depreciation, why we do depreciate our assets. Number 1, technological changes. When the technology change, ultimately your machines become outdated and you cannot use them, and so that's why, keeping in view the technological changes, you have to depreciate your machines on time, right? A depletion, another reason. Depletion like mines, quarries, and oil wells. These all are when we extract the materials from them, and then they start depleting. So with the extraction they deplete. So mines are there. So also we need some assets like mines, quarries, and oil wells. We have to depreciate them based on their extraction. So like is a time factor. When you buy some asset like premises, land and building, and you have bought it on a lease basis or for a fixed period of time, say 10 years or 20 years, as long as the time will pass, so this assets will become ultimately on completion of its leased period. So this you have to get rid of, means you have to leave that premises. So the lease of premises is one of the example for the time factor. Obsolescence, economic factors, and inadequacy. When your machines or your assets are inadequate, you cannot use them to produce. Either they are old fashioned, or they cannot produce the new features products. So they will be. So there are a lot of factors. You can refer to the marking scheme for such small theoretical questions. So second one, what be A, and B, what describe the consistency concept. So you already have studied from your O levels and in AS level what the consistency is. You know what the policies and procedures we adopt in accounting. So we have to adopt and apply them consistently. So like if the depreciation is there, if you are taking a depreciation policy of a straight line, so this will not be a good that for 6 months you keep a straight line method, for the next 6 months you change to reducing balance method, you keep on changing your methods. So this will not be good, and you cannot prepare your accounts properly. So it is very much essential that whatever the policies or the procedures you are adopting, you have to adopt and apply them consistently. What marking scheme says, we will look into this. So marking scheme says, according to Okay, what the marking scheme says, accounting methods are applied in the same way in each accounting period, enabling valid comparison from year to year. This is very much. If you in straight line method in one year, and if you change in the second year you change to reducing balance, then you cannot compare your financial results because you are changing the method. So for a certain period of time you have to keep your uh, 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 procedures and your methods constant. So this is called the consistency concept. So you can refer to your book as well for more details, right? So move on to other question, means other part of the question. Guys, this is some additional information is given. The company's financial year ends on 31st. Always keep your practice to mark the important points and very carefully read your question, and very carefully you have to see what the requirement is. So what they are asking you to prepare a journal entry. Simple, they are asking a very simple question. So what question is, property was purchased on 1st of January 2019, and what was the cost was $850,000. Okay, property is depreciated at 5% per annum, and on cost, so they are depreciating on cost. So it means this is a straight line method, right? Because on original cost, the straight line method considers the original cost, and the depreciation is calculated based on the original cost. And reducing balance, every time we consider the reduced value, actual value minus the depreciation, the net book value, we calculate depreciation on net book value. So this is on cost, it means this is a straight line method. So this is very much clear. On 1st January 2021, the directors decided to revalue the property, okay, to 1200,000, right? So just one thing, okay, so prepare a journal entry to record the revaluation of the property. So I would suggest if you have means did not study, so better would be you David Hopkins, your textbook or your course book, you should study that, the relevant disposal there. But very briefly I can tell you, when sorry, the disposal, not disposal, revaluation of the property. It means number one, what you have to see. So what is this was purchased on 1st of January 2019, and when you are revaluing it on 1st January, means 2019 and 2020, 2 years have passed. So we will see what is the current book value of this assets, and now they are revaluing these assets to 1200,000. So how much is the depreciation? We can see we can say this is working, right? So your cost is 850,000. Depreciation is a straight line, which is 5%. So, or right, into 2 years, because this is applied on cost. So depreciation remains constant for till the whole life of this was cost. Okay, and how much was the depreciation? Depreciation for 2 years. So 850,000 into 5%, and for 2 years. So this will be 10% to 85,000. Your depreciation will be 85,000. So it means this is 85,000. So its net book value, if we see how much it is, 850,000 minus 85,000. So 850 minus 85, So its book value is 785,000. But this is what? This is accumulated depreciation, right? And what entries when, and you know very well, accumulated depreciation has a credit balance. And actually, if you see, if you remember, so your property will be, just 1 minute, okay, it is your property will remain on the on cost. It is 850,000, it will remain, but your depreciation, accumulated depreciation, this will get credited every year by 5,000. So there will be a balance of 85,000 on credit side, right? 850,000 asset debit, and this will be a credit. When after 2 years, when 1st January came, they wanted to revalue asset to the 200,000, right? So remember, always when you are going for the revaluation, do first of all one important point. Remember, whatever the depreciation is there, which is on credit side, you means, I mean, you reverse that first of all. So what you will do, first of all, you should accumulated depreciation, you should, this is on credit side, so you should debit it by 85,000, right? So when you are debiting it, so it will be debited, so no depreciation will be there. This all is just to make you understand, otherwise you don't have to reproduce it during your paper. So this is just to make you understand. So number one, first thing, when you are going to debit, so now actually your asset has, when from 780,000, when you did reverse this depreciation, now it has come to 850,000 original cost, which was the original cost 850,000. So first of all, you have to debit your accumulated depreciation. Now how much they are asking you? Now the difference is from 200 minus, so this is 350,000, and then it means, so you are increasing your asset by 350,000. So is now value is 850,000. You are revising this upward revision. So revaluation 200,000. The difference is 350,000. So now your book is how much? This is 850,000. So you have to brought it down to 200,000. 200,000. This will only be possible when you debit something here with 350,000. So you have to increase your asset by 350,000. So property, you will debit property by 350,000. So how much is this much? How much is this? 350 plus 85. So this 435 will go to your revaluation reserves account. Revaluation reserves, right? So this was very simple. So revaluation, and if you have any doubt or confusion or clarification, you can put your comment on this video, and we will try to answer you. Otherwise, you can refer David Hopkins course book, and that will also help great help to you. So move on to now question part D. So additional information is given to you. Furniture and equipment was purchased on 1st January. Okay, 1st January at cost, and it was furniture and equipment. On this date, on 1st of January 2019, you bought it at at cost of $140,000. Furniture and equipment is depreciated. Always mark the important point, 10% per annum. Yeah, balance method they are using, reducing balance method. Okay. Then move on. On 1st of September 2021. So he bought it on 2019, then 1 year of 2019, then second year of 2020. So it means 2 years, right? In third year, in the month of September, after passing 8 months, so what the directors sold furniture and equipment which had cost 21,000. Actually, you bought uh, uh, 140,000 of different kinds of means two or three equipments or different equipments, and in this 40,000 there was 21,000 one equipment which cost was 21,000. So they are saying that from out of 140,000 one equipment which original cost was 20,000, so they have which had a cost of rupee itna of on September the directors sold this furniture and equipment which had cost 21. A full year's depreciation is charged in the year of purchase, but none. This is you all very carefully read the company policy. The company policy is full year depreciation, year of purchase, right? None in the year of disposal. So this item is being disposed in 2021. So you will consider depreciation for 2020 and 2021, 2 years depreciation. Third year, 8 months have passed, but you will not consider its depreciation, right? So 2 years of depreciation, and they are using depreciation method. Calculate the charge for depreciation of furniture and equipment for the year ended December 31st. Now what they are asking, so you have how much depreciation charge would be there, means the depreciation expense you will record how much, or which is charged to PNL and accumulated depreciation credited. So they are asking in the year at 31st December how much depreciation you will charge for 2021. So this is very easy question. It is not some technical one. So you just consider one thing very carefully, just one thing. Okay. We will do this question here, but you have to do question on the proper. Okay, so we have to calculate this is very simple. So furniture, this again you can say this is working. Always show this as a working furniture and fixture, furniture and equipment, right? You bought 140,000, right? This also include some 21,000. We will separately consider this is the original cost on 1st of January 2019. When 31st of December 2019 comes, so you will charge depreciation, and depreciation is 10% using reducing balance. So its depreciation would be 14,000, right? And in this 14,000, 2,100 would be a depreciation on 21,000. So what will be its value? 140 minus 14. So book value for next year would be 126,000, right? And for this 21,000 minus 2,100, its value would be 18,900, right? So this is not a separate one, but I am asking this is the total and this is its part, right? It's part of it, right? So 18,900, 18,900, right? Then On again on 31st of December 2020, you will charge depreciation expense 10%. So this will be 12,600, and this will be 1890. So sorry, my apology. So 18,900 minus 1890, so this its value will be 17,010, right? So this will be the net book value of this part after 2 years, and in third year, in 8 month, after 8 months in September, this was sold. So and when it is sold, then this will be, it means this you will deduct it. So it means